Hello, traders. Gary Wagner here. 12:19 in Honolulu and 6:19 in New York on Tuesday, 13th day of September 2022. And this is the daily report for gold and silver. Traders, a volatile and violent day in the futures markets across multiple asset classes. These asset classes include U.S. equities, the precious metals, commodities as a whole, and the dollar. Gold plummeted $28.40, currently fixed at $1,712.20. That is a net decline of 1.63%. But it was the dollar that accounted for almost all of that move today. This represents today's candle, an extremely long green line in which market forces moved the dollar index from just above 108 to close just shy of 110, almost a 2% gain, 1.48%, with the dollar index now at 109.915. Another thing that's noteworthy, and we don't look at it every day, is the carnage in the U.S. equities markets. The Dow Jones Industrial Average, along with the S&P, had 4 solid days of gains, and those gains were all taken away today, with the Dow giving up 1,276 points. And in terms of the percentage drawdown, that's 3.94%. But the NASDAQ lost over 5%. The S&P 500 lost over 4%. As I'm sure you're aware of, it was the CPI for August that sent the financial markets into a tailspin, with equities selling off hard, precious metals moving lower. Economists had predicted that we would see a decrease from 8.5% year over year to 8.0 or 7.9. The actual number that came in was 8.3%, in essence guaranteeing that the Federal Reserve will raise rates by at least 75 basis points next week. And even more alarming is the fact that the FedWatch tool from the CME is predicting a 32% probability that the Fed will raise rates by a full percentage point. As we spoke about in the price board, today's move was substantial. It was large. And to put today's large upside move in perspective, we need to go back to March 2020, and I'm concentrating on these 3 candles here as the last occasion in which we saw the dollar move to such a great extent. We're looking at a daily gold chart, and in fact, last night, myself and our trading team were looking at the potential to initiate a trade. And at the time we were looking at gold, it was trading at 1708. Gold is currently at 1712, $4 above that price point. And I still feel better that we did not place the trade because there is still an enormous potential for more downside in gold, which brings us to our analysis. We have been able to hold 1700 quite effectively. And as I said, the key level to me is between 1,700 and 1,711, the 78% fib retracement, because we can see multiple occasions in which we have had lows that have dipped just below 1,700, because I believe that a break below 1,700 almost guarantees that gold will test $1,680. And that is what we're trying to determine, whether or not 1,700 will hold, or if there's a further decline ahead in gold. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.